Good morning and welcome to your Expert Exchange. Well, the Bank of Canada has cut its policy interest rate by 25 basis points and prime rate to 4.25% this morning. I'm back today with Michael Sakuro, CEO of Fluent Capital Management and co-founder and president of Spark Financial Group, to talk about what the next phase of this means for your real estate investments. So Michael, good morning and welcome back.
Thank you, Lindsay. Thank you for having me again. And yes, it's a super exciting day. As we expected, the rates have cut. So let's talk about what that means for these buyers.
Yeah, so this has been a highly anticipated date for many. So let's break that down on what that really means for your real estate investors.
Yeah, absolutely. So this was anticipated. We were expecting from a quarter point to even half a point. And we do have two more rate cuts coming this year. And that's what I'm saying. I'm calling them rate cuts. I'm being optimistic in October and December. And we're looking at another quarter point each time these announcements are coming out. And what's it mean for real estate investors? Well, the variable rates, if you're currently in a variable rate, has come down. And also our fixed rates have come lower as well. So we're seeing a drop in rates, which is great for a lot of investors that are coming up on renewals right now. Because as mentioned in a previous conversation, we have 1.4 trillion mortgages coming up $1.4 trillion in mortgages coming up for renewal in 2025. So a lot of these investors that are currently holding these properties in a variable or fixed mortgage were a little weary about what their renewal rate was going to be. So I think today put them a little bit more at ease, and there's an optimistic future with these potential rate cuts coming in October and December.
So with the latest cuts this morning, how do you expect mortgage rates to respond? I mean, could this lead to a significant increase in home buying activity, particularly among first-time buyers?
I believe so. If you look at it on the grand scheme of things, for $1 million, you're actually looking at only a $750 discount when it comes to your mortgage payment on the interest side. But $750 is a lot for first-time home buyers. That's a car payment, and for many, a mortgage payment in different parts of Canada. Now, looking specifically where we are in Ontario, not too much of a dent in a mortgage payment at $750, but I do feel like this gives a little bit more buyers confidence, and we're going to be seeing a lot more buyers trying to enter the market now with this rate cut.
So considering the rate reduction, what are your predictions then for real estate investments trends in Canada? Do you foresee a surge in investment properties and rental markets? Or, will investors remain cautious due to other economic factors?
I think it's going to be 50-50. I believe there's still going to be a decent amount of investors that are going to remain cautious. Reason being is we are heading to a fall market, which is usually a hotter time for real estate anyways, and we do have a lot of inflated prices we're still seeing. But with this rate cut, we are going to see more properties on the market, as some people are worried about what that renewal is going to look like for them, so they'd rather offload that property. So I feel like it might be a good time for investors to purchase. But again, you're going to see a lot of investors, on the other hand, waiting out to see how the other two rate cuts affect October and December, and also looking at the future of 2025. What are these renewals going to look like? Because again, you have clients that purchase these properties in 2020 with rates as low as 1.1 to 1.2, and when it comes to renewal in 2025, our rates are not going to be anywhere near those prices they were. So you will see more inventory, I feel, coming in 2025 as well.
So what can people do now to prepare for purchase of a property, or the renewal of their current mortgage?
Right now, it's looking at your current mortgage statement, see if you're within that renewal period, or your bank or mortgage broker should be reaching out to you at least 4 to 6 months prior to that, and seeing, okay, what are your options to either paying down, looking at any other investments you have that maybe you might be able to cash in to pay down your mortgage to have a lower mortgage upon renewal when it comes to your time for renewal. Or they could also look at what it would look like to either take some equity out of that property to maybe assist them with purchasing any other investments, whether it be stocks, any high interest yielding products that are out there, or buying another property that may be cash flowing in different parts of the country.
Michael, that's all the time we have, but I know you will be back to break all of this down even further with more tips and tricks. So to our audience, be sure to stay tuned. Again, Michael, that was amazing. Thank you so much for joining me.
Thank you, Lindsay.
That was Michael Sakuro, CEO of Fluent Capital Management, and I'm Lindsay Melchuk. To join the conversation, head to stockhouse.com. We'll see you next time.